traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York on Monday, 29th day of July, 2015, and this is the daily report for gold and silver. Can you say fireworks? We've certainly seen them today with the Dow Jones Industrial Average closing off about 350 points today. Euro dollar all over the board. Gold literally all over the board. Substantially higher in overseas trading, only to come well off of the highs on the day. We're currently trading at 1178.40. We did put out a trade alert recommending that you go long roughly in this area. I think the market was at 1178.50. We are recommending stops at 1161. We'll talk about why that price point is where we feel you've got a good level of safety. We are currently trading up $5.20 on the day. The low that we've seen is 73.20 and the high 87.60. Even with gold trading higher on the day, we have silver remaining under pressure, off about 8 cents on the day, well below $16 per ounce. We did not put out any recommendation on silver. We still think that there's an opportunity, even with everything going on, for silver to trade lower on the day. Currently off about 8 cents, 15.65, the low 63. You can see this high almost at 16 at 15.99. So a pretty wild swing in the market in silver. We'll look at that in just a little bit. So trader, of course, these fireworks that we're seeing today are part and parcel, have a lot to do with what is happening over in the Eurozone and in Greece. The fact that no resolution was met. They are absolutely at an impasse with a major interest payment, I believe, due tomorrow of $1.7 billion. They will not be able to make that. That's obvious. There's a vote on a referendum coming up on Sunday. Can you say kick the can? Interestingly enough, when we look at the euro and on trending markets, we went short the euro, and we saw the euro actually trade as low, if you can see that right here, as 109.38. When the market opened up, we had a dramatic kick down. In other words, this market traded dramatically lower. The best way to see that is on a short-term chart in the euro. Let's go ahead and pull that up. And we're looking at a 120-minute chart, 2-hour chart in the euro. What you can see when we look at this is you had the really sideways trading activity that came in as we went in the weekend. The fact that there was no resolution, nothing was resolved, had a dramatic effect because the market gapped down tremendously. You can see this gap that came in, but the consensus must have been and must be that the Eurozone will do fine without Greece if in fact they do leave the Eurozone, or if in fact they default. Now, tomorrow's payment, from what I have been reading, isn't considered a default. However, it doesn't bode well for the scenario going on. So we came in, we filled this gap. We've come to really our upper level areas that our Elliott wave system is looking for it to go, meaning that we had wave 3, this being our wave 4, and we're probably going to go into a wave 5 taking us back lower. But I will tell you, the dramatic rise that we saw after the fall took many traders, including myself, by surprise, that we had this kind of momentum moving the euro back up. As I said, it traded to roughly 109. We have not seen this kind of volatility within the euro dollar since 2008. That's been quite some time, and we're seeing it today in the market. And to say that we spilled over into our markets is an understatement. Look at the Dow Jones Industrial Average, off about 350 points, almost 2%. Closing on the lows of the day. You can see that right here. And the question is, are we going to see a continuation of the utter meltdown that we saw in the markets today? So back to our recommendation to go long gold. Currently trading at about 79.34, so trading up just a little bit on the day. When we look at this market in terms of our daily chart and where we placed our stop, I'm recommending 1161 on a stop. As I said, you can see current print at 1179 and change. If we look at some of the recent lows, this low right in here came in at around 68, and this low right here came in at around 63, 62, roughly in that area. And that's why my rationale of putting it at 1161, this being 1160 right here, so just a tad off of there, just below this particular low that we got. I'll call it beginning of June. My recommendation, of course, is to maintain our current long position in gold, as well as to maintain our current stop. Now, we did have the stochastic as well as the MACD issue or trigger a buy. We have the fundamentals out there that warrants it. Now, in terms of our current Elliott wave count, it really looks as follows. When we consider that we had our long wave 3 down, this being our wave 4, when we look at our wave 5, our system has really officially closed that out. 1, 2, 3, 4, this being our 5th wave. If that is in fact correct, we should see this market trail up, and it would go into some sort of an ABC, and of course an ABC would be that corrective wave, and that corrective wave, of course, is still found within a bear count. So traders, obviously, when I put out the buy recommendation this morning for gold, I did not include silver with that. I don't think, first of all, silver is going to act in the same way that gold will as a safe haven should the scenario really unravel more than it has over in Greece. I am still looking for lower pricing within the silver market, where, as I said, we're currently trading off, and I still have a downside projection to where I think this particular wave, we're currently in our wave 3 down, but where this wave 3 could take us is anywhere between, call it 1510 to about 1525. And traders, there's been nothing that has indicated that we could see an upward move, especially when we saw the market move up in the way that it did, trading to an intraday high of 1599 before moving lower, and now is trading closer to the lows than the highs. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update review. Bye-bye.